It's a vaccine rollout play. The first thing people are going to do once they're able to start travel around, the U.S., they're going to start to, fill up their gas tanks, go on road trips, buy new vehicles, start flying again. Cruise lines are going to come all back on. So it's a front run.
And that big downward move on Friday, we said, don't try to find a fundamental catalyst to explain that move. That was a lot of technicals, money flow, and options expiration playing a role there. We held support, which we had listed as the previous breakout point from that USDA report.
But as we go into the Fed, we've talked about the frothiness this week. We've talked about how the market's going to have to digest what the Fed gives them, evaluate it, and that creates volatility in and of itself. But some of the selling has been created by hedge funds getting creamed.
We want to look at the data out of the gasoline and also the distillates, because distillates could be a reflection of freight travel with people shipping things. So, and then the gasoline's going to show, that movement around the U.S. as far as trucking and things like that. So I think the data is really important. We put out a nice note on it every Wednesday in our Morning Express report.
One thing I'm watching here on the closing basis for the S&P is 37.90. 37.90 was a gap. It got pinged earlier in the week. We did get below there today. We closed below 37.90. I think the market's going to stay vulnerable as the week unfolds.
Close to a 60-cent range for corn. I'm not talking about beans. I'm talking about a 60-cent weekly range for the corn market. We've gotten some great exports this week. I think the flash sales on 26th, 27th, 28th all are in the top 10 for daily exports for corn.